think that the market had a very dramatic reaction to those tweets on Tuesday, but on Wednesday it seemed like everything has been forgotten, and the stock market is pushing higher, and risk is coming back on. You can see this with emerging market currency too. Here's what I think the takeaway is that regardless of what happens at the November election, fiscal policy will be expanding in the U.S. And it's really a question of the election will determine the scope of the fiscal stimulus and sort of the priorities of it. The issue is really how big of a fiscal package we get and the priorities. And I think that one of the big differences between what the Republicans want, or the White House wants, and the Democrats is about aid to the cities. And that probably is about half of what the Democrats package is talking about. And so I think that that's really the key difference here. It's not that so much that fiscal stimulus is not going to be provided. It doesn't look like it'll come this month. It doesn't look like it'll come next month. It could come really as late as February, after the new president takes office and the new Congress begins. Yeah, I think that what you're articulating, I think, is really one of the pushbacks against the need for large fiscal stimulus, is that how much of this is really COVID related and how much of this is larger problems. I think that, of course, the U.S. Cities, states had some local problems before COVID, but I think COVID has really exacerbated these. And the danger, too, I think, is what typically happens, I think we saw this in 2008 as well, is that officials seem to be under pressure to pull back the punch bowl. And the question is, when do you push it? We can't get it right. So what's the risk? You hold on to too much stimulus or provide too little? And I think that in this environment, I really would agree with Chairman Powell when he said the danger of doing too much seems to be a lot less than doing too little. And so I think that we're having a new surge of the COVID crisis, the pandemic, not just in something like 35 U.S. states, but throughout Europe as well. We're not out of this crisis yet, and so I think anything that happens during the pandemic is, of course, pandemic related then. And so I don't know. I mean, it's not so much a debate about what they ought to do. I think for investors, it's also what's likely to happen. And I think that aid to the airlines, like you said, I think aid to households is going to come forward regardless of which party wins. What we're really talking about is aid to other parts of the economy. Small businesses are getting hard hit. We haven't really been able to figure out how much of this is temporary and how much of this is permanent. But last week we had those jobs data, and the number of permanent layoffs seems to be increasing. I think that the market has really swung over, and you can see this on a number of different surveys. I like looking at predicted.org. This is like a betting website, if you will, where people can take wagers, not on where the euro is going or the dollar is going, but on political events. And they've been showing Biden's lead growing, and as well as the Democrats' likely takeover of the Senate. I think the recent events from the debate to President Trump catching COVID to what happened after he got COVID, what happened before he got COVID, or between the testing and everything. And so if anything, that has come further, I think that swung the pendulum further in favor of the Democrats, as you say, sweep both houses and the White House. I think that that's partly helping the stock market as people realize that the Democrats would have a larger fiscal stimulus, means more support for businesses. When President Trump's tweets hit, the stock market sold off and two currencies rallied, the Japanese yen and the US dollar. And so I think it's not so much about safe haven. I think that that's like a nice thing that people talk about, but I think when you really try to unpack it, what happens? I think it's something like this. The yen and the dollar are used to finance the purchases of other things. And when people sell those other things like stocks, emerging market bonds, risk assets, they buy back their funding currency. And so it's not so much as a safe haven as people are flocking to the U.S., but it's really more of a short covering. Remember yesterday, the euro got slightly above 118, or tested 118, and the British pound tested 130. The Aussie was testing 72 cents. And so when the tweets hit, people had to unwind those positions, and that meant buying back the dollar that they previously sold. Well, I think if some news or shock hits, that forces the emerging market currencies to sell off, or triggers another slide in U.S. equities, I think the dollar could strengthen. But on a trend basis, I think that the U.S., because the U.S. runs a trade deficit and a budget deficit, it needs to import the world's savings. And to do so, it needs to offer an interest rate cushion. And that interest rate cushion now is too small to support the dollar at current levels. So I think the dollar sells off and adjusts. And I think that this is just the early days of what's likely to be a multi-year development. I think it works something like this. I mean, you know, the U.S. only exports about 15% of GDP. Compare that to like Germany, say closer to 40%, or Finland, or Switzerland. So the U.S. doesn't export, or U.S. I should say exports a relatively small amount of its GDP. But the real value, I think, of a weaker dollar is what it does to financial conditions in the United States, and I think what it does globally. I mean, think about a year ago, you know, you and I were talking about how much the emerging markets had borrowed dollar debt that's coming due. And now the dollar will get a little bit cheaper. It will help out the financial condition of emerging markets. I think a weaker dollar generally promotes world growth.